How are you guys doing? Welcome back. Today is lesson 6 scanning, probably one that folks are really going to enjoy because, well, it's very applicable and folks like scanners. Like you look on YouTube, folks are like scanners. So I have some mental points I really want to point out before we get into the bread and butter of this. We're going to discuss today why I'm starting here so early. I've said in the earlier videos, but in case this is your first one watching, let's discuss why I'm starting here at lesson 6 instead of later, and why I find it significant to do scanning early. Second, we're going to discuss what do beginners do wrong. I think beginners, when they scan, do some really stupid things. For example, you scan for plays the next day. As a swing trader, why are you doing that? Right? Let's give ourselves some time to think and things like that. Then we're going to get into my bread and butter scans. These are the most basic and the most leg heavy. The most leg work is included. I don't think folks are going to enjoy the horrible truth I'm going to tell them about scanning and how I think getting too technical is a bad thing, and you're going to see how many stocks I actually look at when I scan for real. it's a lot. And then we're going to look at the personal ones that I use on Finviz. I'm going to try and find the gentlemen who I work with and that I've talked to and that I've found on Reddit that have shared some of these with me. I think a lot of them, we've actually had quite a few similar ones. I want to make sure if I do share those, I can actually share the person who made some of these. If I have a few folks who made a few of these too, and I want to make sure I'm being fair, so check the description box above for the folks who made them and find the original posts about these. Again, I've made plenty that are very similar, but to be transparent, some of these I did in fact borrow, which isn't bad. I think sharing is caring, and I'll share them with you as well. So with that being said, lesson 6, scanning. I mean, it's going to be one of people's favorites. Let's get into it. So why did I start with scanning right after I talked about risk management? The reason is I fear that if you're going to follow Facebook groups, Twitter recommendations, Wall Street bets, my lessons are going to fall upon deaf ears to some extent. I think if you're going to play really good technicals, really good fundamentals and mental analysis and having trading plans and macro goals, then you go play something that has a pump and dump, what the hell are you doing, right? So I want to make sure that you have quality tickers while I go through this course. So while I'm talking about supports and resistances and trend lines and patterns and email lines and all these kinds of great things, you can go find stocks that fit what you want to find. If you have a really high risk tolerance, sure, it's probably not that big of a deal that you go out and play stuff with 20% risk on the line, because who cares, YOLO. But for some of y'all who are here to learn swing trading properly, it probably means a big difference to you finding a stock that's safe from a 9-to-5 perspective. You can go to work, place an order, come home. Maybe it filled, maybe it didn't. Maybe you made money, maybe you didn't. But you didn't blow up your account, right? So I think finding good quality scanners early will actually lend to your education, not take away from it. Because again, I want to emphasize quality on the front end is quality on the back end. We have quite a lot of great lessons to get through. It's a lot of hours of it, so I think if you're going to be applying this stuff slowly, going through this slowly, the scanning process should probably be one of the first lessons. That's why I chose to do it this way. So what are the 5 biggest mistakes I think beginners make? Because this is huge. I think if you're a beginner and you're probably sitting here like, I don't make mistakes. Well, you probably do, and so do I. I always make mistakes too. Let's talk about it. Firstly, you scan for the next day. Now, caveat, if you day trade, makes some sense. If you're going to be scanning for volume, or you're purely going off of catalysts, maybe you're going off of just pump and dumps, which is your prerogative, scanning for the next day kind of makes some sense. But I think additionally, properly scanning for good tickers weeks in advance, even for day trading, has huge pros to it compared to the cons. I think the biggest issue for most beginners is they're like, I found this great stock, let's play it tomorrow. And it's like, whoa. Let's calm down. I think it's really important to scan for days or even weeks in advance. I think your best winners you're going to have, sometimes you find scanning near resistances. You have a beautiful channel up. Oh, it's gorgeous, right? But it's at resistance. You know it's going to take 2 or 3 weeks to come down. I'd rather watch listed now, do the 20-30 minutes of research on it, put an alert on it, and wait for it to come back down to me. Compared to thinking, I'll just come back to it later, all this plays ready for tomorrow. No, this is about quality, not quantity. Again, it's never supposed to be, oh, I want to trade as much as possible. You find the best possible picks, and sometimes you'll get more reward and more profit by properly waiting for it to come to you instead of getting all jazzed up and trying to play everything. So make sure as you do your scanning process, it's not about finding the quickest plays, but again, the most quality you can play eventually. And as you build up a huge list, you'll have plenty of this. But again, take your time, Find quality, not quantity. Even if it's not ready to play today, that extra week or two of research can make a mightily large and huge difference, in my opinion. Second, you scan for profit, not quality. I want to just harp on this again. You may have a pick that is almost a perfect setup, but the reward is 4%. Nothing to write home about. You're not going to play a 4% win and then tell your friends on your Facebook groups like, hell yeah, brother, I did it. Yeah. No, it's not going to happen. You're not going to be all hyped. Compared to the worst trade that can make you 30%, that's not a winning formula. Again, a mental analysis will cover this, but you just make yourself available to the market for opportunities. Sometimes those opportunities will be a fantastic 20% runner that you can buy into. Sometimes it's a 5% easy chill one. You don't get to decide that. You're not in charge of the market. The market is. I think a great, fantastic analogy is surfers. Do you think surfers just surf every wave? No. Ask anyone who surfs. They're extremely patient. They wait for the perfect wave. Sometimes that wave is huge. Sometimes it's nice and long and low. They don't know. They don't decide how the wave currents are going to be. They make themselves available for when it's going to happen. That perfect waves come. Sometimes those waves come 10 in a day and they have a great day surfing. Sometimes they sit out there all day and nothing happens. Right? So give yourself a break. Break that employee mindset. Not every play is going to be the best play. Wait for it to come to you. Always look for quality over price potential or potential reward versus risk. It's not always about that. Just to reiterate my third point, you don't got to play every single day. There's not going to be plays every single day. Sometimes when you scan, you're like, I have FOMO. I have boredom. Whatever it is. You don't have to play every single day. Just make sure you have a relaxed approach to this. The best scanning actually happens on red days when you can't play anything. So give yourself a break and chill. Not playing every single day is a smart and healthy thing, not a dumb thing. Fourth, you scan at the wrong times. If you are in the middle, if you're a day trader scanning during the day, what the hell are you doing? Right? If you're a swing trader scanning during peak hours like 3 o'clock to be buying for value and during the calmest time, what are you doing? Right? Make sure you scan at the proper times. For me, it's on big sell-offs. Ooh, daddy likes sell-offs. Let these bad boys come to me. When there's red days, I am scanning over 3,000 stocks in a day. On a 2% pullback on the S&P, 3,000 stocks usually what I look through. It's very intensive, but again, I find the best plays. And again, it's about making money, not making memes or funny jokes on Twitter. I'm here to print. That's what's important to me, honestly, and teaching others how to do it too. So if you're scanning at the wrong times, you're kneecapping yourself, you're handicapping yourself, make sure you identify the best times for you to scan. Usually it's pre-market, aftermarket, weekends, or on red days. And then lastly, for beginners, you try to play everything. Again, we talked about this last lesson. Again, think about athletes in specialization. You don't have to play everything. You may see a really good ascending triangle, but you're beginning, you're still dipping your little baby toes in, and you see an equally good horizontal channel. You've played those, you're used to those. Stick to the horizontal channel for now. You don't gotta play every wedge down and wedge up and every single credit spread and iron condor this and blah blah blah, and oh, I'm gonna do an option put on this. Play what you're good at and scan for what you're good at. And again, you may not have any plays for a day, 4 days, 2 weeks. Let them come to you. With that being said, let's hit up Finviz. I'll show you my favorite bread and butter scans. So this is probably going to upset some people because folks who really enjoy what I do, they're like, how do you find these plays? Well, I'm going to show you. I go to screener. I go to all. Let's just say hypothetically, because again, we want to scan at the right time. Let's say it's a 2% pullback. All week, we're down 2.5%. I find deals. Here's what I'm going to do. Watch this. Average volume, 300,000. Welcome. That's what I do. And so if you really have the time to dedicate, that's where I start at. Now, it's not going to be the greatest thing of all time. I think you hit the charts button here and go through all of them. Now, again, there's 300 pages is usually what I go through. I'll usually do about 100 plays a day, but you can find some really good plays like this. Again, I don't think this is the best thing for everybody, but if you enjoy my content, that's why folks pay me, because I do this for them and then send them a watch list. But that's my first go-to, is I just go through every single play. Again, why? I think that it's important to have my eyes on everything, honestly. But again, if you want to make it easier on yourself, here's what I would add to that as well. Let's say you're having a good sell-off, whatever it is. Go to the industry tab. In here, there's over 150 industries. I've actually counted, I think it's 158. I could be mistaken because I'm bad at math, but 150 industries. I would go through 10 industries every single day. Even during green times, I think that's fine. You can go to advertising agencies. All right, 21. Get some eyes on it. CCO we've played. Looks pretty good. I like that. Look at MGNI. Looks okay, right? You can go through all of advertisement. All these right here. Let's go through them. Boom, boom, boom. Looks pretty good. I like OMC. We're done. On to the next one. Okay. Aerospace and defense. Only 30. This makes it more digestible. 10 a day. And by halfway through the month, you've seen every single stock at your volume threshold. If yours is a million, this becomes a whole lot easier. Now I swing mid cap and smaller cap, so I have more to go through. But at a million, you probably have about 1,000 charts to go through. You can do that in about 2 weeks. No big deal. There's also an added bonus to this as well when you go through every single industry. You can see similarities and use that for leverage. You're going to notice quite a lot of different industries go in the same direction and trend. If you see all of solar moves the same way and all of uranium moves the same way, that's pretty important, right? Let me show you. We can see if we go to uranium, which I've been playing a lot recently. All of uranium was consolidating, support, support, support. See how all these are the same exact thing? Supports. They all came down here, right? I was watching all of uranium and I said, this is a great buy. I got into CCJ and made like, I don't know, a bunch of money. Easy play because I saw that all of them move in the exact same way. Added bonus, leverage. If you have a smaller account, you can see that we have CCJ, which I played at $16, but you had DNN at $1. Yeah, you can make a whole lot more money with DNN and have way more shares of it. So again, you have built-in leverage and they all move the same exact way. Let's check out solar. I think solar's been doing like the same exact thing. Go to solar industry, look at consolidating, consolidating, triangle, 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 triangle. Every single one is sitting almost in a triangle or a falling wedge. Great value and great consistency. So now you can start buying the ETF that controls these. You want to get the solar ETF? Great. The uranium ETF? Great. You can get a handful basket of stocks instead of playing one ticker, which gives you built-in risk management and also more diversity. I don't think it's the greatest thing to have a whole bunch of diversification, but for something like this, it's a really good added bonus when you go through industries by themselves. Third, for a more macro, hands-off, less specific scanner, are groups. I really like going through groups myself, so go to the groups tab here, and here we go, right? So firstly, if I'm going to be playing day trades, I want to probably find momentum. So whatever one's the highest in the 1 week, so probably a healthcare for here. But again, you can go to the 1 week, energy is the best, energy is looking good, tech, energy, looks pretty good here. If I'm swing trading or long-term investing, you probably want to find the red because that's where you can find your best value. So you want to buy a value investing, look down here. I mean, I bet right here, consumer defensive is probably the best value, but for momentum, healthcare and tech probably make the most sense here. What we can do is you can actually click on energy itself and go see every ticker that's in energy. And again, compare trends. You can see most of these on this first page are going up or they're going down in a wedge formation, right? Wedge, horizontal, up, wedge, wedge, wedge. A lot of consolidation going on here, right? Let's take it a step further. Let's say I want to play an energy stock that I really, really enjoy. I can go to group sector and then go find energy. Wrong button, idiot. And we can see we have different types of energy. We have oil and gas refining and marketing, EP, midstream integrated, drilling, all these types of things. Let's say I really want to play a stock that's in thermal coal, example, right? I can go, all right, thermal coal looks good, click that. All of thermal coal stocks are right here, and I can then play off them. Speaking of which, NC looks like a snack right here. So I can go through sector, I can go through industry, or I can even go through the groups themselves. And again, this is probably more of a veteran thing, but as you can see, just by clicking randomly with coal, these all look very, very similar, right? All besides maybe ARC here, whatever, these 8 all look very, very similar. So that's where I usually begin for most scanners, is go as broad as possible and then get more specific. With that being said, let's get into some more specific ones that folks are really going to enjoy. Just to clarify, I'm going to have these on screen, but you can very easily go in the description box and get these scanners yourselves. So you don't have to like screenshot these on the screen. They're written down below with the link. Go search for them there. First on our shorted stock scanner. This is what I use. Let's go to charts. I always click charts. Way easier to go through. These are your best shorted stocks at the moment. You got Blink on here. You can go through a lot of falling wedges, obviously, because folks are selling it and shorting it. You can go through this and find some really good short plays. You can go like GPRE here, and you can see the short floats here, whatever it is, and do your fundamentals, but obviously a good short stop here. So for this guy, you can go through and find some of the most shorted stocks and see if maybe there's a squeeze happening. Maybe it's just a terrible stock. You can plummet down. That's where I would start for my short squeeze stocks and for ones that are going to be highly shorted. More specifically with short squeezes, this is actually my short squeeze scanner itself. We can go through and see that a lot of these right here, we got Sun L, we got Beam, Blink, a lot of big ones. Geove has been big, Rides being shorted, and these have a good chance of being short squeezed as well. So it's a good place to start if you're gonna have a edge based off of short squeezes. I don't know if it's the best idea ever. It's pretty risky, but when it does work out, it works out pretty well. Next are bankruptcy squeeze candidates. Again, these are not going to be very often, but if you see a bankrupt company that's getting squeezed, you could have some great plays here. Pretty volatile, like Sun L. I mean, it's at a great value. If it comes back, it could be massive. I mean, I'm not putting a lot of money in this one. It's a pretty good scanner though, so I like it. It's pretty good for shorting. Again, those are my short ones for ones that are going down. Maybe you can check the fundamentals. If you find a gem in there though, probably the most reward, honestly. Potential uptrends from weekly lows. A pretty good one, 178. We can see they're starting to show some life, like MMMB looks really good technically speaking. A lot of these are for your weekly lows coming back, so we got Cliff at a great value. These are great for value investing, for swing trading, like KYMR looks gorgeous here. I mean, plenty of great plays here, just for your ones you want to get a good pattern hold that also are at a good value. One of my favorites, really easy one to play, great way to find great uptrend ones from great lows. We then have bouncing off EMA lines. Again, this operates off of the 1 year, so it may not be the greatest thing for some day traders, but again, a lot of these are bouncing off of the EMA lines or SMA lines that you set for the parameters. So you got above 20, below 50, very easy bounces, easy ones, easy plays here, playing bounces. I like this one a lot too. Great for those who want to use EMA lines and SMA lines in their scanners and for their plays. They balance pretty well there. Easy scanner as well. This is my oversold reversal one. This is where we have reversals coming from cheaper stocks. So they're oversold, they're pretty low. And I'll try to reverse from where they are. Like HGen, low, coming back. You know, these are all very much oversold. And maybe do some fundamentals, find why. They could be a really good company at just a low price. But again, they're really going for oversold stocks for sure. With the idea of oversold, we also have oversold with upcoming earnings. So this one's really good for stocks that have earnings that are coming up soon. And they're pretty oversold. So maybe you can get a big move up, maybe a big move down. And again, that's not many here. But BlackBerry, for example, is tightening. You have a really good technical play, what it looks like to be on ORCL here. That seems to be holding pretty well. A really good one, again, goes off earnings. I don't hold through earnings, but you have plenty of potential here for a really big move up or down. Almost guaranteed volatility, which some folks really enjoy. We got new highs here. For whatever reason, these are breaking out. You can go to the charts and see these have all new highs. Again, why is this happening? Could be a great momentum play, could be a great short. Both are great options here. Again, not too many, but you know, built-in volatility. Some folks enjoy that. Next is my breaking out scanner. So this one's where they're breaking out of their current formations, like CalX breaking out, this resistance breaking out, CHH breaking out. So when I'm playing kind of breakouts for sure, you can see breaking all this resistance. If this goes over, well, it's going to be 107 here. Breaks out of that, this bad boy is going to be ripping. So this is really good for those who want to play breakouts or wait for the confirmation of a move change from down to up. Really easy plays here. Next are the SMA crossovers, really good parameters here. We have these that are going from below an SMA to above it. Really, again, bullish setups. Again, you're not going to be able to buy these off of value, but when it comes to buying off momentum, super easy plays here for sure. Then we have plays that are based off high earnings growth. They're doing good when it comes to growth plays. So GME's up there. I mean, I'm sure AMC's up here too. They're just getting huge, pushed higher. Boxel looks good. Playing these plays here are getting much better earnings and they're having great returns. Really good growth companies. Maybe the PE ratio is going to be a bit high because these are growth companies, but as they do better, they look pretty good. Next is high sales growth. They're also just really easy plays for sales growth. These are going higher, showing good life. I mean, you can hold these for years, probably be just fine. And again, you have some great setups like SGen looks good. Facebook look pretty good here. Super easy play up that support line as well. Really good easy scanner as well. I like it. Next is high relative volume. For whatever reason, these stocks are seeing a higher level of volume, and you can see that they're going to be breaking out. They're coming down. Really into good volatility. Easy money to make off of, like AMAT looked at earlier. Higher volume. Interesting. And you can play off that very, very easily. Next is consistent growth in a bullish formation. One of the easiest for swing traders. These are just bullish stocks that are going up with the fundamentals, and they're kind of getting down towards value. Again, Orgo a little bit lower, easy play. AMAT, breakout, easy play. You can see apps with a breakout, easy play. Super easy one for swing traders. I like that one a lot. Not the most usually, but again, very easy. Next is buy and hold off of value. These are your blue chips. These are great stocks that are going to be breaking out or value you can hold for years and years and years. And they're getting down to where you want them to be. Super easy reads, great volatility here. Like Boots, so easy to play. JetBlue is so easy to play. Calex is breaking out. These are ones you can play for weeks, for months, hold for years, and get plenty of great stuff out of them. I like it a lot. Next is undervalued dividend holds. Again, you have to hold these bad boys, but if you get a good value on them, it's even better. The more red you see, the better. Like STT, such an easy read. I mean, PFG breaking out makes a whole lot of sense. I mean, these are so easy to play, and but the lower the price, the better, honestly. But you can see you have great growth, great dividend returns, great yields, and these are the ones you want to buy and hold for years. And if your long-term goals is to have dividend stocks, you probably want to start there, honestly. One of my favorite is good PE ratio scanner. This is ones that have just good PE ratios, and you can find a good value on the PE ratio and then find a good value stock. You could be in a really good looking, you can have a really good time with that. Like TCPC here, what an easy support play it looks like, and if that's a really good PE ratio, consolidation means a big move's coming. If it's up, it could be a very easy play for somebody. And lastly is the CanSlim scanner. Usually this is ones that are really good high growth stocks that institutions and hedge funds like to buy into as well. And so you want to go with the momentum, with the trend. This is what you want to look at. Again, a lot of really big blue chips out here you're going to find, but these are ones that the hedge funds and the institutions are backing that also have a pretty good value for where they're at. So I mean, like MKSI being so low is a great sign. Something like Sky being low, Timber, value being this low is a fantastic pickup. And that's how I use my Finviz scanners. So there you guys have it. I think the best thing you can possibly do is to scan off of just volume and go through industries or maybe just sectors or groups. I think that's probably the best thing for a beginner to get their feet wet, see what they're trying to see, bring those tickers into Thinkorswim and then chart them. But if you want to speed up the process, yeah, those 19 scanners that I really use are in the description box down below. Again, I could have gone more into Thinkorswim scanners. I'm not going to. I could probably put some in the description box as well. I just don't want to use anything that's going to stop someone who's foreign or uses a different platform from actually getting a good education and getting some good scanners as well. I think Finviz does just fine. So what we learned today? Firstly, scan for quality, not the next day. Scan for quality, not for the readiness of that play. It may take weeks. I'd rather wait weeks for the best play to come to me rather than playing something because I'm bored or have FOMO. Let them come to you. Scan for quality, not quantity. Secondly, you want to scan for quality over reward. Yes, there may be a trade that can make you 5,000%. Okay. But you want to scan for the quality stock. Sometimes the best quality only offer in return 4, 5, 6% for a 2 or 3 day hold. Nothing to write home about. But again, the quality, the risk versus reward, the clarity, the simplicity should be number one over anything else. Take your time and find the best quality stocks. Third, don't play every day. It's like what we said with some surfers, right? Surfers wait for that perfect wave. Sometimes they get 5 perfect waves in one day. Sometimes they go out 4 or 5 times in a row and don't get a surf at all. They just wait for that wave. It never comes. Instead of playing with boredom or FOMO, stick to your plan a trade the plan, and let it come to you. Make sure you scan the correct times. Again, I think most best times to scan are before market, after market, weekends, and red days. If it's a good green day and you're trying to scan for stuff, too late, wrong, like that Lex Luthor meme. Make sure you're scanning at the best times, the right times, and again, after hours, before market, weekends, and red days. My personal favorite. Lastly, make sure if you're a beginner, don't gotta play everything, okay? Let the proper scans come to you. If you want to play only horizontal channels, look those up, let them come to you. It may be only playing 20, 30 tickers for the first few months. That's fine. Take your time. It's quality, not quantity. You don't gotta play every little different wedge up, wedge down channel this, support break that, break out this, value play this. Chill out. Scan what you want to scan for, the 1 or 2 patterns that you like, and just go from there. Then we went through quite a few different scanners. Again, my bread and butter is simple. The volume that I like is 300,000. Over that, and that's it. It takes a while. So again, if you want to skip that process, subscribe to my Patreon. Otherwise, you're going to have to probably do it yourself. Follow it up by going through just different industries, 10 a day, 12 a day, 15 a day. You'll go through every single ticker at that volume threshold that you set within 2 weeks usually. Or third, go to the groups through Finviz and then go through energy. All the energy stocks are there, utilities, All utility stocks are there, and go through that instead. Again, it may take you 2 weeks, but again, every ticker you'll see over your volume threshold gives you some great insight. And then last, we covered 19 scanners that I like, some personal, some from folks on Reddit, some folks from Twitter. I'm not going to claim I have all of them are mine, but again, they share them for free, so I want to pass this along to you guys as well. Go in the description box to check those out. Scan for what you want to scan for, use what you want to use. It's all good by me. Next, lesson 7, let's discuss realistic goals for your account size in this class. I want to make sure it's crystal clear. Have the right mindset going into technical analysis, which is a good long unit for you. Have the right mindset. If you have a very small account, what should you be focusing on? If you have a large account, what should you be focusing on? During the whole entire unit, what should you hope to gain out of it? We'll discuss that next. Again, it's been a lot of repeating a lot of these things, but to prepare for the class properly, I felt the need to do this. So, lesson 7, realistic goals for this class and your account size. Let's get into it.